There's a growing number of voices talking about crypto markets bottoming out. Yes, you heard that right. But are we getting ahead of ourselves, or is it time to brace for a rally? And how high could things ultimately go? Well, Markus Thielen of Matrixport is here to tell us what he thinks. Markus, this is the most exciting time of a bear market, isn't it? Asking whether we've hit the bottom yet. Do we think this is as bad as things are going to get? A lot of hedge funds, by their very nature, perhaps are predisposed towards calling bottoms as soon as they possibly can, but there does seem to be plenty of risk still out there, certainly as far as interest rates are concerned, and the broader macro environment as well. I'd like to get your take on what you make of this, what your projections are, and if this isn't the bottom, when you think that ultimately will be.
You know, you make the most money when markets, of course, turning, so that's why I think a lot of people are trying to pick the bottom here and there, and that's why it's really important. And I think with appropriate stop loss and risk management, it's probably a good time to kind of call for the bottom here. And I think a lot of experts have been trying to do this over the last few months, but I think we have more and more evidence this might really be in the cards now, right? So number one, of course, the US economy seems to be slowing. Some people argue that, of course, the strong labor market growth that we heard again last month from last week's data release is a sign that the US is still very strong, but I would argue that it's actually a negative sign because the labor participation rate goes actually up. And I think that's, combined with what we have seen over the last few months. For example, the ISM manufacturing index has been going down. So the new orders, the forward-looking indicator, has been in contraction in 3 out of the last 4 months. And I think last but not least, we're hearing from companies. We heard from Nike that inventory levels are extremely high. So the consumer is definitely, not really, being as strong as I think a lot of, the Fed members seem to project. And I think we're coming now closer and closer to the midterm election. So I can imagine that the Fed is going to turn a little bit on the pause. They're going to slow down the rate hiking cycle. And I think this can really give crypto markets and risk assets a breathing ground. So I think now is really a good time to really look for the bottom and really, start to position yourself for it.
So hedge fund boss Mark Yusko was talking about what he calls a face melter of a crypto rally to come. It sounds like he's incredibly bullish on crypto in general after this bottoming out. I'm curious about how high you see crypto prices in general going, but also where you see the share of crypto going. A lot of people had said that Bitcoin has had its time, and whilst it may ultimately go up still, actually its share will end up decreasing in comparison to other digital assets, and maybe those are the ones that you're going to see better returns on going forwards.
So there's, of course, institutional adoption, which I think, still continues. There's every day we're having discussions with some of our institutional clients. They're allocating, they're building research teams, they're building, their IT infrastructure in the background. And, on the other aspect is, of course, we're having, we just had the merge, the ETH merge. That's, of course, making everything, preparing everything to make everything cheaper for the transaction. And I think we have to really look very carefully, what are the use cases with a much cheaper transactional cost. But of course, Bitcoin, I think, has really a special place for a lot of people because it's, limited supply. And I think, there's always the institutional demand for having an asset that has really a fixed supply. The other aspect, of course, is right now we are a little bit stuck at this 20,000 level in Bitcoin because there is a lot of hedging going on from Bitcoin miners. But I think the exciting story is really going forward on Ethereum. So you can generate something like 5 to 6% in staking of Ethereum, and I think there is a lot of demand for this, especially institutions. They're just looking at this as a yielding asset, and I think it's just really nice when you see every day that you stake these just keeps increasing. I mean, this is much faster than, of course, interest rates than you get in the traditional finance market. So a lot of stuff is happening, and I think that makes myself and my colleagues here quite constructive on the market.
Meanwhile, Markus, regulators have been playing catch-up to crypto. It looks like they might finally be catching up with that and getting a hold on things. Do you think institutions are going to be concerned about regulators overstepping the mark and potentially holding things back? And how do you think the risk-taking element of institutional exposure is going to be gauged internally as well as by governments and authorities?
Well, I think everybody is looking for regulatory guidance, right? Because all the big institutional players, they need the guidance. This is their requirements. And I think everybody's just anxiously waiting for it. And, some people, of course, pointing again to the midterm elections, that there's, some movements finally happening. I mean, we just had the release of, from the Basel Banking Supervisory Committee coming out and suggesting like 1% of banks' tier 1 capital being allocated to cryptocurrencies. Some industry lobbying groups are arguing it should be 5%. I mean, these are actually like enormous numbers. Even like 1% would already set, a nice level playing field for traditional finance firms really entering the market. And I think we just have to really see between the line here that actually the door is being opened. The regulatory bodies are entering the market and setting the guidelines. And I think this really opens the door for a lot more institutional adoption, because it becomes part of the regulatory environment. And I think that's what everybody is looking for. And so we are really welcoming this.
All right, Markus, thanks so much for joining us today. That was Markus Thielen from Matrixport.